Good morning, everyone. Still morning out here in California, 11:30. I just got back from running a quick errand to get my son. This is a quick little gold update. What a beautiful move here this morning. Look at this. Look at this selling, the selling pressure we had all the way down here. Then look at this morning's move. This is a 1 hour chart, but this deep volume, deep low volume buying. I mean, this is very telltale of a final washout low. And we started moving up into this upward channel here. Now, Fibonacci price theory, we've gotten above this level and this level down here. And this level down here. These are all independent, what are called standout highs. So you need to understand that in Fibonacci price theory, each one of these peaks creates a standout high, because standout highs, and I've done this before, let me try to report it here, try to keep this fairly short. Standout highs, lows, equal new high low that has been breached within the last 10 to 15 bars. Unique high lows or new high lows that have not been breached in the last 10 to 15 bars. And ultimate high lows are new that have not been breached in the last 21 plus bars. So now this is all theoretically based on time. So I need you to understand that all of this is an example of price structure. So when we look at a high here, we go back to see, has it been touched in the last 5 or 10 to 15 bars? And if it has, it becomes a standout. If we get a high or a low like this that has not been touched in the last 10 to or 15 bars, then it becomes a unique. If it is a low that has not been touched in the last, let's call it 21 plus or 30 plus bars, like we have here and here and here, and likely here, I can do the math, but I can see more than 20 bars here. These become ultimates. So now ultimate like this, let me mark this here, come back here. This is an ultimate low. It is also a unique low, and it is also a standout. So I need you to understand, standouts can be uniques and can be ultimates, but a standout that does not meet the unique criteria and or the ultimate criteria are just standout highs and lows. So a standout high or low is something that's been touched in the last 10 or 15 bars. So here is a standout because it has been touched in the last 10 or 15 bars. Here is a standout because it has been touched in the last 10 to 15 bars. Here is a standout because it has been touched in the last 10 to 15 bars. Here is a standout because it has been touched in the last 10 to 15 bars. Make sense? Okay. Same thing. Each one of these independent little lows, like when you get a dip like this is a standout low because it has been touched in the last 10 to 15 bars. This is a standout low. This is a standout low. So you can see them. They happen all over the place. They happen regularly, and we can identify them real simply using these criteria. Something that has not been touched like this in the last 10 to 15 bars, which is this one, probably this one as well. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 12, 13, 14, 15. Yep, this is a unique. I'll make this a little heavier, and I'll make this purple. A unique standout high or low is something that has not been touched in the last 15 to 20 bars. So you can do the math and see the calculations. Even this one, I have to do the math. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Yep, it qualifies. This becomes a unique low as well, which means this would be another unique low right here. Every single one of these becomes a valid trigger point based on Fibonacci theory. And what we're looking for is we're looking for price to break these on the way down. So it sets this unique low and it breaks it. Here is a standout low right here, and it broke it. I'm going to make this one red. 2. Here is another standout low, and it broke it. Okay, so when we get down into these breaking of these low patterns, okay, we are then looking for a breakdown of trend. And here's another standout low that gets broken right here. Here's another standout low that gets broken right here. Technically, the close below. And so what we're looking for is price will typically, here's a standout high. Forgot to mark this one. And price will typically roll through these moves. So you can see as we're breaking down, we break these lows. As we break back upward, we break these highs, but then we reject off of that move right here. This is a big rejection bar coming back down. Now we've set up a standout high way up here, okay? So I'm going to mark this, actually is the same high as that one back over there, and carry this all the way out. So you can see as we map price, we're able to see the dominant trend. Now, what we're seeing in gold right now, and the reason I did all of this is to show you what we're seeing over here. We are seeing a very clean kind of a basing pattern here. And we have now moved into, based on rejection points, higher rejection points, likely to see us move higher in price. We have also broken through all of these rejection points. The next rejection point up here, look, guys, we've gotten above these levels. Okay, as long as we don't retrace back downward, we're moving very cleanly to try to take out this next high. And that's because the rule of Fibonacci price theory is that price must attempt to take out new highs if it cannot continue to take out new lows. So we come down here, we're breaking downward, right here's the base. We start to roll upward, we start to break above some of these levels. We start to break above these levels. We clearly break above this level here. This is now bullish trending, okay? And at this point, until this bullish trending fails, the objective of price, after taking out these highs right over here, the objective of price is to come up to this level, 2670. If it cannot establish new lows, then it must attempt to establish new highs. In order to establish a new high, we've got to get above this peak level. That would be considered a new Fibonacci price high. Technically, this would be our high right now. Oops. Technically, this is our high right now. And so price would have to attempt to again break above this level. And once it does, again, the ultimate target is this 2670. So what price would end up doing in this scenario is price would end up potentially rolling up, consolidating, rolling up, consolidating, rolling up, breaking that, consolidating, and rolling up to around the 2690 and 2700 area again, assuming we get this big rolling pattern. Now, price could at any point reject this move. So in theory, price could come up in this area, reject at this level, roll back down, and then at that point, we would be looking for the 382 and 618 levels of this low. So we can measure from here to here, and we would be looking at this area for support. So very positive for gold right now. I think we're going to see gold continue to move higher. The next move again is to try to get above this 382 level, given the range that we've suggested. That's 2653. And then once we get above that level, I think we have a clear sailing up here to 2670. So our real last ceiling is right here for gold. Try to draw that a little cleaner. I guess my mouse doesn't like going sideways, or I could just draw it with a line. Our real last ceiling level is right there, 2653.3. After that, I think we're going straight up, and I think we're going to see a nice solid rally to the upside. Not happen today, but I think we're going to see it rally into next week and very solidly move higher. I'm going to leave these here so you guys can understand what standout highs and lows are. We'll take a quick look at silver. Nice solid rally phase as well. There's the lines that I drew before on this failure. You can see that we've got very clean higher lows coming across here. We have a number of high price levels, Fibonacci highs coming across here, and I'll try to draw them so you can see them. But these are the major highs coming across these levels on the way up. We got one more right here. Oops, go away. And we have one more right here. And one more right here. Each one of these Fibonacci price patterns is very important for you to understand. They represent, triggers in price that tell us, and that's the real theory behind a price theory, is that price is the ultimate indicator. Okay, it literally tells you what's going on. And now you need to understand that as we have mapped out these price patterns, and now remember from where we're at right now, seeing as though we've cleared every other high, the next high is here, then here, then here, then here, then here, then here. And unless I'm missing something, then here, then here. So ultimately, what would happen here with silver is we would see a move from this area, breaking above this current high, probably running into resistance here, maybe just rolling into this area, and then trying to get higher. And that's, again, ultimately assuming it does not reject at any point here. If it did reject, assuming that we're able to get back up into these areas, not just this area, we would use a Fibonacci price range, and we would look for support in this case, which is going to be a very big area between this area and this area. And this is what I call, it's actually in Japanese candlestick terms called the belt line area. So the 382 to 50 level or 618 level represents the middle of a price bar or the middle of price range. And it is essentially the control factor. It goes back to Japanese candlestick theory, which represents the control of sumo wrestlers, meaning that if you could grab the sumo wrestlers' belt line, remember they wear their tiny little outfits, you could get a hold of that belt line with your hand you could control the other wrestler. And that's where this theory comes from. It comes from the idea that if price can wrestle above the belt line area up in here, then the bulls have dominant control. If price is unable to wrestle these lines, then the bears have dominant control. Now, I drew this level all the way up here to this peak, assuming that we can get up to that level. We can, at this point, determine that we're in an uptrend because of the way the price is rallying, and we have about, a little bit more to go before market's going to close here, and then it'll pick back up eventually. But we need to get above this 3180 to 3130 area. We need to see silver wrestle control of this area and rally up above it for us to then expect a target, a real target level up in this area, up in 3260. So again, more techniques that I use on a regular basis. Hopefully you guys are figuring this out. But remember, as I showed you right here, this was done a couple days ago on the rejection of this pattern, indicating, and this is actually not a rejection, this is an inverted excess phase peak pattern. It's peaked, it's rolled, it's now moving higher. It failed to get below this level on a strong close. So now we would be setting up a new high and then consolidating and then rolling to an ultimate high, potentially. Notice how I drew it back into these areas. Notice how my new high area here is right in the 382 to 618 area. I see these things. I see them on the chart. Though not even having these lines, not even drawing any of this, I saw this, and when I drew this level, I moved it to near the 50% area. That's right here, this level, within the 382 and 618 area, knowing that this would become potentially our support or resistance zone. So again, having the ability to see this play out visually is what I'm ultimately trying to teach you. When you see a range like this here in this range, from these lows to these highs, where would I expect price to consolidate if we were to see a pullback? Personally, I'd say that you're going to be looking right in this area, because I can tell you that that's going to be roughly the 382 to 50 area. And again, I'll move this over here so you can see it. But there you go. 382 to 50 to 618, right in that area, just where I drew it. So I want you to start seeing charts in this manner. Okay, it's very important that you understand. Look at a range, like right here or anywhere. Let's look at a range. Okay, any range. Look at this range. Where do you think the 382 to 618 area is going to be? I'm going to say basically right in this area. Okay, and now I can check my work by coming right down to this area. And there's where I drew the 382 to 618 area. It's right in the middle of that range. A little low down here, but I did it visually. So that's, again, what I want you to try to figure out. It helps you see these patterns on a more regular basis. And like I said, right now I'm looking for a strong move to break above this level. For silver, we need 3178, call it 3180, and we will be off to the races. Okay, guys, more later.